All right, what up, guys? Anthony here with Hawkeye Traders. Welcome to the video. I want to show you how you could have absolutely crushed the gold market this morning. I identified these moves live, right? This is not hindsight. This is, hey, this is transpiring right now. And how did I do that? Very simple. I paired volume and price action using the Hawkeye tools. That's it. Look at my screen. There's nothing on it, right? There's volume on the bottom, and there's price action on the top. That's it. That's it. And that's all you need. The problem is many of you are cluttering your chart with stuff that has no meaning to it. If it doesn't have a meaning, there is no reason for it to be there. Plain and simple, right? So let's talk about this price action here. We have a double top earlier. This is, what is that? About 6 a.m. We retest this area at about 7. So we got a double top and then we get a sell-off. Double tops are meaningful to me, right? Like if that was an area of resistance, it may become a new area of support. So ideally, I need to understand price action, right? And then I need to understand how volume works with it. And that's what we provide. We provide you not just with the tools, but with the knowledge you need in order to pair those components together. Because without volume and price action, you got nothing. Sorry. I don't care what you have. Without those two things, you have nothing. So let's talk about how this all kind of played out here. We break that double top here at about 8:40, and we place this very specific high. Let's see if I can get my arrows in order here. This very specific high. Let's make that orange so you guys can see it a little better. With this very specific volume print. Boink, right there. Now, I want you to notice something about the volume, and I'm going to zoom in so that it gets a little bit exaggerated. I want you to notice this. Okay? I'm going to just draw a very simple trend line. What's the volume doing? Broadly. Over the last 5 or 6 bars, broadly, volume is increasing. Okay? And then we get this massive, ultra-high, wide bar print. What does that tell you? This tells me, and I identified this live with witnesses, that we are going to, more likely than not, draw back. Maybe not for the entire session, but we're going to draw back. And that's exactly what happened. Well, where did we draw back into? The prior highs from the 6 to 7 a.m. time frame. Prior resistance becomes newly appointed support. Very simple. Let me show you how easy this is. The wick of this candle is your risk. That's it. Closes here. The high is here. You're risking roughly 20 ticks. Okay, now this comes into risk management. Notice you have some room for price improvement. It does draw higher before going lower. Where is your target? Right there at those prior highs that were previously resistance, now newly appointed support. So you have a reward potential of just over 60 ticks. So you have a 3-to-1 risk reward on this trade setup. If you're wrong, you're going to lose 20 ticks. If you're right, you have the potential of earning 60 ticks. Seems reasonable to me, right? 1 to 3, that's pretty good. That's pretty good. All identified by simply looking at volume, price action. Now, again, I told you this may not be the high for the session. What repeats itself? Well, let's talk about it. Let's dial in right here to 9:39, just a few minutes after the U.S. opening bell. Gold once again makes a grand gesture attempt to go higher. That candle I'm looking at right there. Okay? Grand gesture attempt. On what? Again, ultra high buying volume. Look down below, right where I put the dot. What's the risk? What's the reward? Right? At the end of the day, that's what we are. We're managers or stewards of the money that we have in our brokerage account. What's the risk? What's the reward? So let's measure it out. The risk is the wick, okay? Because if we're wrong, price is going to violate this wick. The high right there, again, 20 ticks. No big deal. What's our reward? Well, we're going to go right back to where we had already found support, which is right here, at about 90. Okay? 90. So that's like 4.2 to 1 risk reward. That's pretty good, right? Risking 20, trying to get 90. Like I said, about a 4.2%, a 4.2 to 1 risk reward roughly. What does the market do? It's still respecting this level. Notice we played below it, but who cares? Who cares? You nailed 60 ticks on a volume climax. Right into the level that price action told you to take your profit. Again, on another newly appointed volume climax, you just nailed nearly another 90 ticks. Who cares what the market's doing the rest of the day? You just nailed 130 ticks. I'm sorry, 150 ticks. 150 ticks with a total of 40 ticks that you risked. You are done for the day. Walk the dog, enjoy your life. That's the benefit of trading. If you're sitting here trying to trade every little nuance the market gives you, you are going to blow up your trading account, I promise you. If you are only looking for the highest quality trades that you are pairing with volume and price action around a risk management based trade plan, that's what it takes. That's what it takes to be great in this business. Now, the question is, are you willing to put the time and effort in to achieve that? My goal, Hawkeye's goal, is to help that learning curve speed up so that you have the tools that will read the volume so that you can, with confidence, analyze the situation and decide if it meets your risk management needs. We also provide the education that you need so that you can come in and identify the price action like I did. Because guys, my entire analysis outside of the volume climaxes is what? One single line drawn on the chart. And this is not hindsight. I did this live this morning. Okay, so this is not like, oh, Anthony's going to just come back and cherry pick an opportunity. No. I did this live this morning in front of people. Right? Like I said to them, my analysis, my interpretation, my expectation. Volume climax, price is going to pull back to where? Previously resistance, newly appointed support. That's it. It did it twice. And it worked flawlessly. Why? Because volume and price action are the only two things that matter. Take all the rest of the stuff off your chart. Focus on the volume and the price action, and that's it. And if you can't find a great opportunity, tomorrow's another day. But we found two this morning in gold, live. Over 150 ticks of profit potential with 40 ticks of risk. It doesn't get better, in my humble opinion. You may feel differently. So, with that statement being made, I encourage you to click the links below, consume the content. I want you to reach out to myself or my concierge team at Hawkeye. I want you to ask your questions, and if we're a fit to help you move along in your trading career, then we look forward to working with you. If we're not, perhaps subscribe to the channel, leave a comment, I'll be happy to answer it, like the video, so this way you see our new content as it comes out, so that you can gain exposure to our approach to the market. Guys, I appreciate each and every one of you and your time watching this video. God bless, and I will see you in the next one.